Hello everyone, welcome back to another video. In this video, I'm going to be teaching you an ICT trading strategy which has an incredible win rate. It works in a London session and it is absolutely amazing. It's something you have never seen before and it will change your view on the markets and actually help you start bagging a lot of pips and help you pass your first fund challenge. So without further ado, let's get straight into it. So the first thing we need to do is we need to align the basics of the strategy. So for example, we're going to trade this on a few trading pairs, the GBP/USD, EUR/USD, and SPX 500. The next thing we're going to do, we're going to get the times that you actually trade the strategy at. We're going to trade the strategy on the 15-minute time frame, and we're going to trade it on the 1M time frame. The next thing we have to do is we have to know the times that you actually have to trade this strategy at. You can trade this at the London Open. So for example, I'm at the London time right over here. If you're going to go on the New York time, which is right over here, as you can see, you're going to trade it from right here, 3 a.m. New York time, all the way to 4 a.m. New York time. This 1 hour will make you more than someone working hours and hours or months, or even years on years, depending on your capital which you're actually trading with. So yeah, this 1 hour time period is going to make you a lot of money. So yeah, you're going to trade this from 3 a.m. to 4 a.m. New York time, or you're going to trade it from 8 a.m. to 9 a.m. UK time. Okay, it's very easy, very straightforward. So the next thing we have to do is we actually have to know what to actually use when trading the strategy. So for example, we need to know what liquidity sweeps are. So liquidity, we have to know what, you can know what market structure shift is and displacement. However, you don't necessarily need that. This is completely different to anything you've learned on YouTube before. So don't worry about that too much. But if you want, you can know what market structure shift and displacement is. The next thing we have to know is the engulfment candles. And the next thing we have to know is the ICT power of 3. But don't worry, I'm going to tell you all of this in this video, especially the power of 3. This helps you increase your win rate by so much. So here you go. I've got all of these on my chart right now. And then what we're going to do, we're going to wait for price from all the way here, 5 p.m. The reason why we mark out the 5 p.m. time is because this is where the new daily candle opens. And we're going to use the ICT daily power of 3 to our benefit to increase our win rate by so much. So for example, right over here, this is 3 a.m. This is our London opening time, all the way till 4 a.m., which is our trading times. We're going to let market do whatever it wants. If it wants to go up, it goes up. If it wants to go down, it goes down. So for example, from 5 p.m. all the way to 3 a.m. and if you're going to go on a London time, as we can see, same exact thing. If you want to trade from 10 p.m. all the way to 8 a.m., you're going to let market do whatever it wants. Okay, if it wants to go up, down, let it do what it wants. And then as soon as our trading time just hit 8 o'clock, we're going to ask ourselves, okay, so from the opening price all the way to the highest point, how many pips did it go up? Okay, it went up 37 pips, and how many pips did it go down? And then we're going to ask ourselves, how many pips did it go down? Okay, it only went down 1.2 pips. So that means it was much more bullish than bearish. If it's not more than double, then you're not going to enter anything. However, for this case, market was actually double from the opening all the way to over here. As you can see, 40 pips bullish and there's only 1 pip bearish, which is way more than double. That means it's way more bullish than bearish. And what you have to do after our trading time is we're going to only enter sells. We're going to do the opposite of what this did. This was bullish. After our trading time, we're going to enter bearishness. And this is the ICT daily power of 3. Accumulation, manipulation, and distribution. So the manipulation and accumulation part was right over here. The accumulation part was when market opened. Manipulation was when price went towards the upside, and now we're going to enter off the distribution, which happens usually at this 8 a.m. London time. And you can catch so much pips with this strategy right over here. Massive RRs. And you can also catch really nice win rate trades. So you can risk a lot more in your trade when you're entering it. So what you're going to do as soon as price hits your trading time, you're going to wait for a 15-minute liquidity to take out. What can happen is a new high forms right over here because you're looking for sells, right? Because price went bullish. So you're going to do the opposite of that. So you can wait for a high to be taken out. So for example, this high right over here. Or what you can do is you can wait for an old high to be taken out. So for example, right over there. As soon as price takes out the high, what you can wait for, you go down to the 1 minute time frame. You can literally wait for a bearish engulfment candle. As soon as you get this bearish engulfment candle, enter the trade. However, what can happen is that if you're going to use the bearish engulfment candle model, if price does this, so for example, it forms a bearish engulfment candle right over here. No, it doesn't, sorry. And then it breaks this high, don't enter any trades. I'm going to show you what I mean in the chart examples I show you. I'm going to show you 3 chart examples, and you're not going to understand any of them if you don't watch them all to the end. So make sure you watch that one carefully into the end. And if you are still watching this video, make sure you leave a comment and like the video. and subscribe to the channel. We're just trying to grow, reach 100 subscribers, and yeah, you will see a lot more of this. Okay, so now let me show you this first example right over here, and yeah, let's get straight into it. But before I do carry on, if you do want to get funded guaranteed for the cheapest price, link in the description below. Don't pay these hundreds of dollars for the funded challenges. We do the cheapest prices you've ever seen, and we have a 100% success rate in order to pass your challenge for you. We've never failed a challenge, and again, 100% success rate, cheapest prices, when the routes are reliable, and you will not be disappointed. The average person loses their funded challenge. About 95% of people actually lose funded challenges. Don't let that be you. Join us today for a guaranteed pass. So anyway, as soon as we got our trading time right over here, we're going the 15-minute time frame. Now let's wait for a liquidity sweep. As you can see, we got this high right over here. The 15-minute time frame swept this liquidity. We go down to the 1-minute time frame. Now let's wait for a bearish engulfment candle after that. We haven't got a bearish engulfment candle here, and the problem with this strategy right now is that price took out this liquidity. As soon as it took out this liquidity, we broke this high. So we're not going to wait for a bearish engulfment candle yet now anymore. We can wait for a market structure shift with displacement, which we can do right over here. As you can see, we got a market structure shift with displacement off this low right over here. As soon as we got that, we got the extreme FVG right over here. And now what you can do is you can enter from this stop loss above the high. As you can see, it does eventually end up dropping. And that's what I'm really and truly just trying to tell you. You don't have to always look for bearish engulfing candles. However, this is a very easy example I'm going to show you. As I did tell you, your entry is going to be right over here off the FVG, stop loss above the high, and where you're going to take profit is the opposing liquidity. 1 to 2, 1 to 3 RR. Don't always go for something crazy, because in the long run, it might not work for you too well. Okay. So now for the second example, this is the one which will make loads of you lose the market. So make sure you watch this one carefully, and again to the end. Same exact thing. This is a bearish engulfment type of example this time. So as you can see, first we're going to ask ourselves, okay, so from our opening time, which is 10 p.m. UK time, which is 5 p.m. New York time, all the way to our trading time, was price more bearish or more bullish? So from the opening price right over here, how many pips did it go up? It went 25 pips up, and it went 29 pips down. That means it was way more bearish than bullish. That means you should do the opposite. So it went more down than up. That means you should enter buys and not sells. So for example, this is a day when I wouldn't really enter a trade. The reason why I wouldn't enter a trade on this day is because, again, I would like to see it be at least double. So for example, as you can see from the opening price right over here, it went up 25 pips and it went down around 28 pips. That's not double. So you just leave the market alone. You might see a trade right over here. However, that actually would end up touching your stop loss if you don't follow the plan. This is a very nice example right over here, and this is the final one which I'm going to show you. That's the one which can fool you a lot, with the one which I just showed you. So make sure you watch this one carefully to the end, because this is a bullish engulfment example which I'm going to show you. This entry model is so much better than anything I've shown before. So as you can see, opening price right over here, how many pips did it go bearish? It went down 104 pips, and it went up around 6.4. That's so much more than double. That means you should enter a trade for the day. Now let's go on the 15-minute time frame, wait for a liquidity sweep off a low. Okay, there you go. We had a liquidity sweep of this fractal low right over here. As you can see, this is a low, because the candle before it and after it didn't go below that low. So that's a fractal low for us right over there. Then we go down to the 1-minute time frame, wait for a market structure shift with displacement. However, we don't need to wait for that. As soon as price took out this liquidity, as you can see, this green candle bullish engulfs the body of this red candle. As soon as that happens, get into your trade, stop loss below the low right over there, and you're gonna have your take profit 1 to 2, 1 to 3, or you can have it as well opposing liquidity, which is very, very, very nice. Get into your trade as soon as you have that bearish engulfment candle. If you were to wait on the market structure shift with displacement, as you can see, we had a market structure shift right over here. There wasn't much displacement for this one right over there because price didn't penetrate through this level. But as you can see, you could have entered off this extreme FVG, stop loss below the low, and then you can have your take profit 1 to 1, 1 to 2, 1 to 3 RR, which it does actually end up going to. So a very, very, very nice trading day, and yeah, you could actually get a lot of pips when actually using the strategy. So if you enjoyed this video, make sure you like, subscribe. If you want to get your funded challenge pass, link in the description below. And if you want us to actually mentor you, link in the description below. It's very cheap. Everything I sell, it's not expensive at all. So link in the description below. And yeah, like, subscribe. I'll see you all in the next video. Have a good day.